If anybody thinks payments in Africa are not 1% built, you're lying. Like, you know you are lying.
There's just so many manual processes in the loop. So a lot of this stuff just ends up getting caught up in humans and the lack of tech. All of this stuff is still just, I like the 1% built.
That's Benjamin Fernandes, the co-founder and CEO of the remittance platform Nala, and Dan Kleinbaum, who first built and sold Beyonic to Onafriq and is now building the FX platform GTXN.
You're building any tech company in Africa, you automatically become a fintech company, not by choice, but by nature of the market. So many things are broke.
The infrastructure in emerging markets in Africa in general that needs to be built, there will be value there, particularly on the B2B side. Trade gets done no matter what. People need to move money in and out no matter what.
Why is cross-border payments in Africa so hard? How long do you have?
In this episode of The Flip, we interrogate why cross-border payments are so hard in Africa and why, as Benjamin says, payments in Africa are just 1% built today. This episode of The Flip was recorded live at the FinTech in Africa Summit in New York, where some of the biggest growth stage fintechs from across the continent were brought together with global investors and strategic partners. Be sure to check out FT Partners' latest FinTech in Africa research report, which we've linked to in the show notes. Before we start, we have one small favor to ask. If you enjoy the show and want to support the content that we create, please hit that subscribe button. It only takes a second, but it will mean a lot to us if you do.
Benji, so you sort of famously say that payments are 1% built in Africa. Can we start there and maybe talk a little bit about why cross-border payments are still so hard and still so underdeveloped in the region?
Cool. If anybody thinks payments in Africa are not 1% built, you're lying. Like, you know you are lying. Because every single time, as you're building you're building any tech company in Africa, you automatically become a fintech company, not by choice, but by nature of the market. So many things are broke. I have friends who are starting healthcare companies, like let's say data, like reconciliation for healthcare. And then all of a sudden, a big challenge is collection of payments there, and then they can't even get the true data of like the payments happening. They end up building like some sort of light infrastructure for healthcare payments, and then they're a fintech company. All of a sudden, they started to be a data healthcare company, but became a fintech company over time. So I do believe it's 1% built. I think there's a lot of work that needs to be done across the continent. I think a majority of the investments that are going to happen across the continent over the next 15 years, number one will still be fintech until that's solved that scale. So 1% built for a long time.
And so for your purview in particular, cross-border payments and remittance, why is it still so hard?
Why is cross-border payments in Africa so hard? How long do you have? I think many things. I think, number one, most people don't talk about the dollar shortage, which is insane to me, right? Africa's a net import region. We import more than we export. So every country, majority of the countries in Africa have a trade deficit. So if you look at Kenya, for example, 2021 import value, 23 billion, export value, 7 billion. If you add remittance volume of 4 billion, you have an $11.5 billion trade deficit. So companies like Dan can really take advantage of that. And take advantage meaning they can help people source FX better and grow their businesses more directly, because so many companies lose money on FX across Africa. So I think that's one where it's really big, where it makes it really hard. Banks, for example, between Tanzania and Kenya that are just doing transactions have to convert money from Tanzanian shillings to dollars wire via SWIFT to Kenya dollars back to Kenyan shillings. I'm like, okay, why can't we just swap or do netting directly? I think I'm saying it really quickly, but it's way more complicated than that. So I think there's many things in line that make it really difficult. I think a dollar shortage is a big one that keeps payments really expensive to the African continent and will be that way for a very long time. People always say, well, can the other remittance companies exist? Of course, and a lot of them will come. There's going to be a lot more companies after Nala doing the exact same thing as Nala, and that will do well because that market is just growing. The amount of people leaving. Anyway, I'll stop right there because I've been talking so much.
Yeah, so Dan, I think when we think about cross-border, for me at least, like I initially would have always assumed that it was regulation, sort of like customer acquisition, then integrations. But I think this FX piece, this like cross-border currency piece is a really important part that we, like the sort of proverbial we don't talk a lot about. And you've dedicated a lot of time towards payments, and then after Beyonic decided to come back and to address this challenge. So can you talk a little bit about why you decided to do that and the approach that you're taking to make a dent?
Yeah, so the same trade deficit that Benji mentioned, which was I think $11 billion in Kenya, the revenue that banks see by controlling the FX markets is probably 7 to 10% of that total trade deficit.
At least, yeah. 100%.
And like, so it's regulatory very difficult, but the current major players in the ecosystem, which are the major banks, are extracting a ton of value from anyone trying to operate in and out. You combine that with very low levels in terms of settlement time, like it takes a long time to move money in. Like I pay a supplier in Kenya from the US, it could take 7 days for that transfer to clear. So if I'm moving a large value transaction into or out of Kenya, it takes that much time. The banks control the FX, they take all the margin. And the question that we started asking was, if I am moving large values in and out of emerging markets that have this trade imbalance, can I buy and sell directly from the folks that are on the other side? It's a simple question to ask. It is a very hard question to come up with an answer that is, regulatory compliant, that people are comfortable transacting with. But that's what we're taking on.
This episode of The Flip is sponsored by Onafriq. In our ever-changing world, sending money home remains a constant part of many of our lives. Customers demand reliable and simple remittance solutions catering to their specific needs. The necessity to support loved ones will always transcend borders, and in this hyper-connected era, the expectation is fast and secure remittance solutions. Onafriq understands this, and that's why they built a solution to offer flexibility in how your customers send money and how their families receive it. They provide access to various payment options, including mobile money, card, bank account, and cash pickup, all supporting real-time transaction delivery. With just one connection, you get access to over 500 million wallets across Africa, offering seamless peer-to-peer transactions that transcend borders. Are you ready to transform the way your customers send and receive remittances? Learn more at onafriq.com.
Can you talk a little bit about then, in the context of that being a really hard question, how you begin to address it?
Yeah, so we look at how do we create sort of a wholesale FX marketplace that, if I'm buying and selling, call it a couple $100,000 up to $1 million at a time in any market, in and out of, call it dollars at local currency, how can I do it with someone directly and do it in a way that is compliant, there's no settlement risk? In other words, we take on the burden of settlement so that if you two are trading with each other, I don't have to necessarily introduce you to, but you trust me that when you give me money, you're going to get money on the other end. And that's what we've built, is kind of a layer to take care of that on a wholesale level.
And Benji, from Nala's perspective, maybe there's a range of challenges that you have to overcome. I asked you why it's so hard. You said dollar shortage was number one. So is that currency issue maybe the biggest challenge you have to overcome, or is there a range including currency?
I think there's so many big buckets. So currency, that talks about the FX problem across Africa. The second one is payment reliability, which most people don't talk about, think that it's already resolved. I will tell you, with some of the biggest partners we work with across the continent, reliability rates fluctuate between 70% to 85%. Some more context on that. We work in 11 markets across Africa with some of the biggest payout partners who are even here at this event. And we measure everybody's success rate directly every single month. Every 5 seconds, we do a test to see what is the success on reliability. Between May 2023 to January 2024, the last 6 months, we averaged 25 partner incidences per month in last 6 months. 25, average. So you can imagine every morning I wake up, I'm like, okay, I wonder which payout partner is going to be down today. That's literally the discussion and what we think about. So infrastructure, I think, that's why I keep saying it's 1% build, because there is so much more that needs to be built. And that's a whole separate. And then obviously regulation is one. You get licenses, you can go as deep as possible into the market, you can increase your reliability directly. So I think those are the big 3 categories I'd box it into.
You raised something interesting, which is we like to talk about in the African tech ecosystem, why is somebody going and building another cross-border payments app, right? And it's like almost a meme at this point that so many people are going to do it. But it sounds like from your perspective, that's not really the right way to focus, because maybe even there should be more like infrastructure payments companies, because the reliability is not there and the problem is not solved. And there should be more cross-border remittance companies because the scope of the problem is so wide and people haven't really solved it. So that's what you think?
I think so, because every day I get messages from customers directly, and whenever there's a delayed transaction, I read these personally and I send them to my team and I look at the data myself. So for example, over here, I got a text message from one of my friends who's been using Nala for 2 years. So for context, our retention rate after a year is 61%. Compared to a lot of our competitors, that's way higher. Right, so the number one reason customers leave Nala is because of reliability, where they had one bad transaction. See, everybody thinks it's FX rates. FX rates gets the customer into the funnel. But once they start transacting, as long as you're within 0.5% of the next best competitor, it's good enough. People will stay. It's a sticky product. People will send money home every single month. Now, let me read this text message from this person right here. It says, bro, this is it. He posted a screenshot of a delayed transfer, and it was delayed for 2 days. This is it. Unfortunately, I'm done with Nala, and I'll take my small coins elsewhere. Completely unacceptable service and customer relations. Your reliability is garbage. I've recommended Nala to hundreds of people over the last 2 years, and I'm sad this is how we part ways. That's a text message this person sends me. And then I looked into it, and it was one of the payout partners who delayed the payment. And I looked into it, I was like, what happened? They're like, oh, our treasury person forgot to pre-fund your account on Friday, so we have to wait till Monday till the payment is dispersed. Now, this person has a hospital bill he's trying to pay for an aunt, and then Nolly takes the blame for it. So I think until reliability increases, other global payments businesses will not even focus on investing in Africa.
Can I actually ask a question there? Like, it's actually really interesting that you got to get a real answer on why that payment was delayed, because I think anyone operating in this space usually just spills out some bullshit on like, oh, our partner didn't come, and it's like, oh, our treasury guy actually messed up, or, the bank didn't clear the payment.
But you know what happened until it got there? I called the CEO directly. I'm like, yo, this is the blank number of time this has happened within this month alone. Like, what's up? The CEO is right here. Like, we can bring them out. They know who they are. But I think as you look at things directly, I think operationally, people assume that it's not just a tech issue. It's a whole operations ball game that has not been nailed across a lot of large infrastructure players.
There's just so many manual processes in the loop. And so this is like small value transactions where it's okay, you didn't pre-fund, but when you move more than $10,000 in, there's manual approval processes on every step along the way. So if I'm moving from the US into Kenya, it goes from the US into a correspondent bank, verified, transacted, and then from the correspondent bank, wherever it needs to go. And then there's, again, humans in the loop. And like, if the guy just doesn't wake up and go to work, then, and it's on a Friday, and then, Monday is a holiday, then that doesn't get cleared until Tuesday. And so a lot of this stuff just ends up getting caught up in humans and the lack of tech and sort of and this is the infrastructure piece that like needs to get built from like, coordinating settlement to dealing with disbursements. Like all of this stuff is still just, I like the 1% bill. I'll tease you a little bit, but only because
exactly.
I love you.
I really think, because if we look at it, what are the major errors? There's like 11 errors that we get all the time. Like, let's say Dan was dispersing to Justin's account. Justin's account can only hold $10,000. Dan is sending $2,000. Justin has $9,800. Payment failed. Why? We don't know why. We call the disbursement partner, yo, what happened? Oh, I don't know. Why? Because there's layers of the onion. Like, this partner is built on top of this partner, is on this partner, on top of this partner, finally down to Justin's bank. So who messed up the transaction? We don't know. We have to wait till this person calls all of them. Then we finally find out later, oh, by the way, Justin's account was full. I'm like, well, why didn't you tell me before Dan initiated the transaction in the first place? Right. So that's one of the errors. There's 11 errors we see most common. And I think if people, it's easier said than done. Dan built a payment aggregator business in Uganda before, sold it for a lot of money. He retired and then came back into the game. But, I think there is so much more that needs to be built there. And we're just at the beginning stage of that.
It raises a question about, like, we talk about API infrastructure that is the building blocks on top of which other stuff gets built, right? And then the sort of inverse of that is, well, you can't rely on these third parties, and therefore you have to build infrastructure yourself. So there are some people who we heard here who were talking about we had to build a lot of our own infrastructure either because it didn't exist or because it wasn't good enough, right? How do you think about that? Like, you're more of like a plug-in to help other people, but are you thinking about like we have to build more ourselves because we don't want to have to rely on everyone else?
Yeah, I think the challenge is how do you scale the business over time, right? So for context, when you're starting out, most people will work with a large aggregator that has in multiple markets. Now, getting an 85% success rate, fine, at the beginning when you're doing 10 transactions a day. Then you're doing 100 transactions a day. Then you're doing 1,000 transactions a day. Then you're doing 10,000 transactions a day, and you have 1,500 people calling you saying you suck. That's where the scaling problem becomes to really become a massive cost.
It would help if you didn't give people your personal phone number, but that's, I love that you handle your customers that way.
Dan
But it shouldn't have to be that way, though. Right?
People call me. Some of y'all call me, and I get it. Sometimes I'm like, okay, why? How many unread messages do I have there on WhatsApp?
Enough to make me stressed off. 1,300.
1,378 is because one person will have my number, and they'll just send it to, here's the CEO's number. Just like ping him. I'm like, yeah, I'm gonna solve the problem.
But can
tomorrow.
I say something about that though? Is like, I often tweet about the cross-border payments issues that I have, right? Every time I do, I get the CEOs DMing me or messaging me, oh, my thing can solve that. But it shouldn't have to be that way. Like, you shouldn't have to also know the CEO to be able to like have your cross-border payments needs met, right? So, yeah.
You can build tech, but I also think we approach it in terms of also thinking about ways to build redundancy. Like, you can build APIs that'll give you payment integrations, but then we'll also figure out, if I get an email from my bank saying a payment has been processed, I'll also then process that email in a way that I will get a secondary confirmation on any payment. And if I don't receive it, or they'll send a payment confirmation, but they won't attach the SWIFT confirmation, which means that the bank hasn't processed it. And so it's building these pieces together in a way that it's not going to be us going all the way down to whatever the bottom layer is. It's like piecing together where we can get information across what does exist and figuring out how to make things more reliable.
There's one player we both know really well that at some point was giving us a call back that the payment was successful. So we would tell all our customers, yeah, Justin sent money, it's successful, it's delivered. They call obviously like, hey, did you receive the money? No. Now all of a sudden we had this huge influx of a bunch of people calling us because their callback API was telling us the payment was dispersed. So then all of a sudden, the payments weren't dispersed, customers are mad at us, and then they double paid. So I'm like, great, we just lost $60,000 in one day thanks to this partner. Now imagine trying to call all those people like, hey, yo, listen, I know we messed up, but can you refund this money really quickly because my bank account is not looking great right now. But that's the problem, and nothing, not even Nala's fault. Like that's what happened, and then that was the cost for us directly as a business.
Can I actually ask a question? Because this is something I've been thinking about, which is like, regulators are always something we have to navigate. But the answer to that in some ways is like a consumer protection regulator that enforces certain standards and reliability. I go back and forth on whether or not I want more regulation that's sort of consumer friendly or less regulation that I have to then go and tackle when I want to get up and running.
Yeah, no, it's hard because, for example, even with consumer protection data, like we were applying for license in one of the countries in Africa, and our customers don't live in Africa. Nala's customers live in the US, UK, Europe, who send money to Africa. And this regulator said, okay, if you have this country's customers, we expect your primary data to be in that country. I'm like, but my customers are not here. So I was like, whose law do I comply by? Do I comply by my UK GDPR law or European GDPR law, or do I comply by this country's data rights? And we wasted 6 months just debating with them on whose law to follow.
Before you could get a license.
Before even the discussion for the license. Like, it's like, oh, well, Nala's not agreeing to use our local data centers. I'm like, and so I think there's a lot of things where there is consumer protection laws like that are created, but then they also limit innovation and creativity for businesses that are trying to operate there.
So let me ask you then, this has become a conversation mostly like lamenting about the difficulties of this space, right? Yet you guys are both still building businesses that are trying to solve problems in the cross-border payments space. So you must see what you're doing, like the fact that payments are 1% built is a massive opportunity, right? It's just a lot of hard work. Is that how you guys see it?
Yeah. Emilio, you want to take that one? Like,
I have a high tolerance for pain, but no, there's definitely...
You definitely do. This guy's been through a lot. So like, I have so much respect for this guy right here.
Like, I think that part of it is like, I see you care very deeply and I share that, right? Is like one of the things that motivates us is the fact that we can lament about all the problems, but the problems are visible to us. And trying to solve them is hard, and it's worthwhile if you make it
but what
work.
attracted you to this problem in particular that you decided after you sold your business and took some time off, you wanted to go back to doing something like this?
For me, it was one of the problems that we had deeply at Beyonic, was just trying to manage payments moving in and out. It's literally what kept me up at night. I think I've told you this before, but I had control over, I think, 17 or 20 different, bank and mobile money accounts at any given time. And the day that I handed the bank tokens over to Luke, it was that scene from Lord of the Rings where Frodo gives a ring to Bilbo and like Frodo just starts to like see colors and hear birds sing. Like that's what it felt like. It was a weight lifted up. So like if we could figure out how to manage, like treasury and liquidity and payments moving in and out in a way that was sane, like it's something that was worth solving for me, and everyone has this problem. So that's the motivation there.
And for you?
So for me, why I'm working on it. So I don't know, I think the African continent has a lot of potential. It's the most expensive in the world to trade with. And the way I look at it and think about Nala is, how do we build payments for the next billion? Like population growth is going to be 1.3 billion to 2.5 billion by 2050. Like there's a huge wave of new people, there's a huge wave of new businesses that are going to come trade with the region. Are we enabling that to be cheaper, faster, more reliable? Do it affordably. I think the challenge which we heard here all today was you end up building so much even while you're just trying to service one part of your business. And I think that's what's challenging with building across Africa.
And you guys, though, are now thinking about both like geographic expansion, but also product expansion, right? Like you've started to do some business to business, right? And is that part of it also, is that if you want to have the sort of impact that you want, like there's opportunity, not just from a consumer was maybe an entry point for you, but there's a lot of opportunity from a business perspective when it comes to cross-border too?
Yeah, I think, this is what happened. We would discuss failure rates with other companies. I was like, hey, are you guys also getting these failures? Is it also costing you this much money to like disperse into these markets? One of their big remittance companies was recently fined $1.5 million by the CFPB here in the United States because of being incorrect about delivery times. And if you read that article, it says telling customers the payments would happen instantly when they would take much longer than normal, like over an hour plus or whatever to get delivered. And they were fined $1.5 million. So when you see these things happen more frequently, it's not just a problem that affects you, but many people in the industry. So you're like, okay, hey, if we solve this directly, and the decision we made as Nala was like, this problem is only going to get solved at the source. And so for the last 2 years, we've applied for 9 licenses. We've received 3 of them so far. And because it's been a big focus for this, because ultimately going down to the root and solving the true problem will make you a long-term sustainable business by building reliably.
So we're here in New York at a FinTech in Africa conference. There's a lot of global investors. You guys have both raised from global investors. So I'm curious to get your perspective on, like, what is the story that you're telling with respect to cross-border payments and remittance and payments infrastructure? What is the story that you're telling to your investors, to the world, about why you guys are building backable companies and why you should invest, especially considering like the range of, investment opportunities that global investors have?
For us, the story is that the infrastructure in emerging markets and Africa in general that needs to be built, like there will be value there, particularly on the B2B side. The trade gets done no matter what. People need to move money in and out no matter what. And when you look at sort of the geography and the territory of where companies are going to expand, the African continent is clearly at the top of the list for many, many people. And so there's going to be opportunities for more funding. There's going to be it's going to be easier to do trade. And that's the story we're telling, right? Is that it's just going to, this is where it's going to go. And even in a world that is not the easiest fundraising environment, okay, we have to keep building. So,
I mean, for us, it's a few tailwinds to keep in mind. One that I talked about earlier. So if you look at the data for even remittances, just take remittances, not even cross-border payments. Remittances alone as a category to Africa. Official World Bank data says 111 billion. FT Partners data says 333 billion to 500 billion if you include informal market. And nobody realizes how big the informal market is. For example, at Nala, 26% of our customer base, first time using a digital service was Nala, which is crazy. A quarter of our customers, first time using digital. So when we meet these customers, I was like, how are you sending before? Like, P2P. I had my person, my barber in London, East London. If I go to my barber, we go get a haircut together. We probably both need a haircut right now. And we go get a haircut right now. My barber, it's like, hey, I want to send money to Ghana. My barber will pull up WhatsApp and show me like 8 groups and ask me, what rate do you want? And if I hand him cash or send him money in the UK to peer-to-peer transfer, that money will arrive in Ghana in 3 hours, guaranteed. I've tried it twice. So I even took one of our investors. I was like, yo, come check this out. Because they didn't believe me. I'm like, yo, cool, let's go. So I think a large part of those transactions, if 300 billion, let's take the lower amount of FT Partners prediction, in 2022 year end, they said 333 billion was the amount that was sent to Africa. How is that sent from 18 million people, if that's the true amount of Africans that live in Europe and the United States? Surely there's a lot more people that live in Europe. So I think the numbers for the African region, even just for the category of remittances, is totally uncounted for. At some point, there's a company that we all know really well. It's a big remittance company. They were doing $1 billion to Kenya alone in 2020, this one company, for remittances. Kenya's data last year in 2023 was $4 billion total of remittances. So how in the world in 2020, 3 years before that, was one company doing $1 billion to Kenya alone when the total volume was, are they doing 25% of Kenya? Sorry, first piece to keep in mind is all the data about Africa's remittance is incorrect. Second thing to keep in mind is the market is growing, massively in a very rapid pace because, the famous Nigerian saying, go and japa, which means leave, and go abroad. Or go somewhere else, basically leave Nigeria. That's not just a Nigeria thing, that's an all Africa thing. So if you look at, as the population grows in the African region from 1.3 billion to 2.5 billion, there's going to be a large exodus of people leaving the continent. And therefore, the market side that's actually just getting set in the remittance category alone is only going to increase. And the pace it's increasing is faster than any other region in the world. From July 2022 to July 2023, registered Nigerians in the UK that left Nigeria to move to the UK was 142,000. That's registered. That's not even including migrants who just came in however they came in. So that's just one country. So anyway, I think the market is growing, and that's what I tell people. You would have to believe that this market's going to grow over time. And as you're building that, you have to also believe that global businesses are going to come trade with the African region as our rising middle class grows, as more income to spend on commercers like Netflix for collections directly there, that's going to grow over time. So that's what I'm telling you have to believe.
And there's a lot of global trade happening too. I think that's another thing that's overlooked. That's interesting to it. Yeah.
Giving aid is not just about sending funds. It's about ensuring that your beneficiaries receive secure and prompt payments, especially in the most remote regions of Africa. That's why Onafriq offers simple bulk payments that connect you directly to millions of people, including last-mile users, through mobile money wallets, cash pickup, or bank transfers. Onafriq's simple plug-and-play solution or API connection expands your reach effortlessly, providing essential aid to new regions efficiently. Their real-time customizable data and analytics platform provide clear insights into your aid disbursement, making it easier for you to make informed decisions. If you are an NGO or a global development organization looking to expand and enhance your disbursement, Onafriq is the partner for you. Visit Onafriq now to speak with their regional team.
Actually, we should ask him questions, given he's always asking us questions.
What do you want to ask me?
What scares you the most about the African continent?
With respect to like tech in particular?
Yeah, with tech.
The longer you're around, the more jaded you and other people get, right? The more realistic you are about the challenges, right? And you see a lot of business fail. You see a lot of people leave, just like kind of give up, right? And so for me, it's like, well, you're making a bet on a region that's very unproven. And I'm generally of the opinion that that is exactly why you want to be in the place. But then sometimes it's like, well, what if all these things are true? What if like the macro environment can't be overcome, right? I don't necessarily believe it, but it's worrisome, right? Like if you're a Nigerian business dealing with devaluation in Nigeria, that's scary. And like the extent to which like the Nigerian situation then gets extrapolated to the rest of the continent, it's worrisome sometimes, you know?
I have a bunch more questions. Do you have any for him? As you look at the continent, specifically in tech, or here in fintech specifically, what are 3 patterns or themes within fintech you're bullish on?
Cross-border trade. I think we so often think about like global north or like west to Africa, right? I'm fascinated by like Nigeria to China trade routes, for example, right? And like Nigerian merchants who have payment needs, who are buying stuff from exporters in China, right? And I think that what the rest of the world is doing is interesting, right? Less so than like the US, its relationship with the region, right? The extent to which like trade can increase. If it's easier, trade can increase across the continent, right? And there's just a lot of payments needs to be met in that respect. I'm interested in asset financing. I think that we always talk about there's huge credit gaps and how is that going to be filled? I don't think that like uncollateralized consumer lending is the way, but I think people are really figuring out how to collateralize, how to sort of make repayment happen, like they shut off the motorcycle or the cell phone, you know? And I think thinking about like collateral and the assets that you can use and lending towards productivity is really interesting. Or like verticalization, right? Like these companies that are just know their customer really well are doing some other thing and then embedding finance as part of that. That's really interesting to me. And then just like in general, those who can figure out the interplay between like an offline ground game and digital payments, right? Again, this idea of like the informal economy is whatever, 60, 70, 80% of a given market, right? And how much things are happening cash-based and what does it look like to take those users on a journey? And those who are really good at like ground game, like agent networks distribution that are figuring it out really well. That's interesting to me because I think the story about the continent in general is non-consumption, right? If technology can be used to increase productivity or to make things easier, right? Taking in mind where users are in their sort of digital journey, I think a lot of growth is going to come from non-consumption, and that's going to involve a lot of like offline stuff, bringing people online or figuring out that relationship between offline and digital payments.
And if you were to tell all the investors here just one sentence about Africa, what would you tell them?
You're investing in non-consumption. The metrics that you see today don't tell the story if the market's going to continue to grow, right? And the extent to which enabling infrastructure gets better and unlocks opportunities and can turn the sort of like all of the business and value that's happening in plain sight, turn that into something that can be captured. That's the opportunity that they're betting on, I think.
Do you think we're telling those stories well enough?
No. It's like everyone should be giving prosperity paradox to their investors. I think it's that's the other thing. Like everyone's talking about their specific companies, right? So to what extent do you have a role to tell a macro story when you're speaking about your specific company, right? I ask a lot of people, like, when you are talking to investors, are you telling your story? Are you telling like an African story? And they say, well, like my story is an African story, but like you kind of have to You know, I don't know, right?
You have
to take
we have
people
to
on
do
the
both.
journey.
I 100% agree, because you have a 30-minute call with an investor. They've never invested in the African region. Like, for us, it's even different, because all our customers live in the US, UK, and Europe. We have no customers in Africa. So it's very different. But still, like, of the 30 minutes, like, I think 17 minutes explaining Africa. And then I don't even get to talk about what we're building until, like, the last 14
If
minutes.
only there was a podcast you could send to them, like, in advance.
Yeah, I'm like, hey, can you watch this really quickly?
Yeah,
Like,
no, it's
you
a
know.
mandatory requirement, and there will be a pre-quiz before you actually go in with a meeting.
Do you know what I do now? Like, the article I wrote recently about our African remittance, that's helped me the most. That's probably my most, it's like 1,000 reads a week. I was like, yo, that's by far my most read thing I've ever
Good
written.
article.
I know, but like,
Yeah.
now I just send it to people. I'm like, yo, before we meet, I think you should read this.
Yeah.
And I try to make it digestible, but yeah.
But I do think that there are themes, right? Non-consumption, right? So like the population growth story is a bit derivative, right? And like it's been heard before, but inside of that story is like, how are you going to increase the productivity of the informal sector, and how are you going to turn these guys into consumers, right? And how do you capture that value?
And I think we're talking a lot about customer dynamics and not necessarily about market dynamics. And there is a piece of this, which is, you know, I have this controversial take, which is I think everyone that's raising money on the continent should be tooling themselves for a $50 to $250 million exit and nothing more. And that doesn't necessarily jive with what, you know, Power Law returns need $1 billion business, because I don't know that, like, I really hope a lot of those folks will get there. But I think a lot of people are going to see, you know, down rounds because of those aspirations took them to get someplace that isn't realistic in the market.
I agree, right? It's how big of a business can you build when you're trying to convert Benji's barber to a digital,
Yeah, from running his Hawala network out of it.
Yeah. Our networks are undefeated. I don't care what.
No
But that being
one's
said,
ever going to beat them.
That's the
Yeah.
story, though, is how much of this stuff is happening already, right? So you look at the McKinsey or UN stats or whatever, right? And that's not taking into account the way that money moves in reality, right? That's the story that I think is quite interesting.
I mean, I would guess that in any given market, I bet the two largest inflows and outflows are, like, on the particular remittance side, are Hawalas and then crypto.
Yeah. Well, I'm also not even convinced about crypto, though. I think people who talk about crypto with Africa, yeah, I mean, you know what I'm talking about. I'm not, you know, I'm a big personal believer in crypto, but I just don't see like, when you get licensed, it's a different ballgame with crypto.
You can't do it with
You can't at all.
taking
And
a
those who
regulatory
are saying
approach.
that they're doing it with a license, I don't believe you at all. And I've challenged you guys in my meetings with you, and you couldn't answer me. So I don't believe anybody who's doing it with crypto.
Not so subtle
But-
shade.
Huh? I know, but
Yeah.
like, you know it's
I
true.
agree
You
with
know
you,
it's
yeah.
true. I keep it 100 here. The other thing, Justin, I was gonna say, is I'm excited about the builders. I think there's going to be a lot of cool companies that are coming beyond us that will build amazing businesses, because there's so many things that need to be solved. And so if somebody's watching the Flip podcast, they should think about, hey, look, actually, payments really are 1% build. We need a lot of you guys to take that to 2% before even getting to 99%. So please go and build great companies. Dan will help you. I will help you where I can. Right? Yeah, Dan said he will. Dan will be an angel investor. I don't have that type of money right now. So, you know, find Dan, email him if you need that extra check.
Dan at theflip.africa.
Yeah.
Perfect.